Hello everyone, welcome back to my channel. I'm your host Miss KK and this is The Wave. It is your weekly show that looks at topics related to personal, family and business finances, and our hope is that by the time we get to the end of this series, we are really better equipped to make sound financial decisions. If you are new here, thank you so much for stopping by, and if you're already a returning subscriber, an awesome appreciation to you guys for always engaging with our content and sharing it with your friends and family, as doing that really greatly helps. So today I'm doing the first reflection of my Q1 goals in 2022. I normally set my goals on a quarterly basis. This quarterly helps me to plan in advance, helps me to have a bit of horizon to reflect on, helps me to get sort of corrective action between month 1 and month 2 if things are not really going on track, and then really just helps me to give myself time to catch up on the progress in an event that I feel like I'm lacking behind. So that is really the reason why I do my goals on a quarterly basis. Okay, so this year really started off with a big move for us. We relocated from Wavish Bay to Windhoek, and in that relocation, of course, it involved costs. So I just want to touch on a few things that were involved in that relocation. Number one, you need to keep in mind whether you are moving voluntarily or you're being relocated by your employer. Because if you are being relocated by your employer might be reimbursing you for the cost of that travel, and that is what exactly happened in our case. We were asked to move here by our employer, so employer reimbursed us the cost of that travel. And surprisingly enough, a big truck to Windhoek, between Wavish Bay and Windhoek, costs around about 8,000. So that is how much, I think 8,000, 8,400. That's how much we had to pay for the relocation. And I promise you, the drama ended at the police. The contractor who arranged with us was actually a subcontractor who was subcontracted by someone else who then actually had the truck. So it was really a whole big hoo-ah. My friends would tell you they came to assist us with the move about 8 to 9, and we ended up at the police, left the police around 12 o'clock. So it wasn't really the easiest of the move, but nonetheless, so that's the one thing I want you to just think of, whether you're going to be bearing the cost by yourself or you're going to be reimbursed by your employer. Number two, obviously the relocation had us moving out of our house, and we had to come and look for a rental place to stay. And renting a place in month 1 involves the agent fee. In an event you are using an agent to get you a contract, it also involves paying up a rental deposit and actually that month's rent. So the cost related to the rent was a bit too much for us because we had to pay the deposit, the rent, and some agent fee. So basically, those are the costs that you need to bear in mind if you are going to be changing apartments. And because we were not renting in Wavish Bay, there was no deposit to be refunded by anybody there. So that meant we just had to fork up the deposit on the site. And that also meant that we're vacating our house in Wavish Bay, and because we were on holiday in the north, came back and had to move up to Windhoek. We didn't really have time to look for a tenant, so we had a vacant property for 1 month because we needed to move out. We moved it in the middle of the month. We didn't really move on the 1st of January because we'd want to move on New Year's Eve, and we were actually still on the farm at that time. But nonetheless, so we moved, I think, the first week of January, and then we still had to clean the place, and also still had to do some background checks on the tenant. Luckily, we had a few people that were interested in the property, so we were able to get a tenant to move in the 1st of February. And obviously, that also meant that from 1st of February, we had a bit of a rental income coming from the property. But also, if you're following my story on especially on Instagram, you'd notice that I post regularly about construction. We're actually busy in the process of constructing the house. So the tenants that are currently there are actually accommodating us amidst all the construction, but the existing structure can still be used without being disturbed by the construction. And there's no heavy work happening at the house at the moment. The rest of the things that are happening is actually just the inside of the house that doesn't require a lot of heavy work. So that actually worked in our favor. So that is really the first thing that I wanted to highlight at the beginning of the month that just happened to get us into this year. Then I want to touch on the highlights for the 3 months that just ended. So obviously topping the list is the construction. Guys, the construction has been taking up a lot of the household income. Is because we are going aggressive on the construction. We are trying to finish the construction in August of 2022. We started around about September last year. So by August, we'll just be completing a 1-year cycle. It'll be quite interesting if we actually get to make the 1-year mark and we are actually constructing cash. So that requires a lot of patience, it requires a lot of sacrifices, it requires a lot of, compromises here and there, but we are doing quite well. We look like we are on track unless things go out of proportion. And with the global economy going out of balance, with prices being, adjusted randomly, this might just throw in a curveball, but it's nothing that we won't be able to handle, so we are just doing it one step at a time. All right. Then with regards to debt, we didn't take on any new debt. Construction obviously involved debt, but we decided we are not going to take on any new debt, so we kept the debt of the house. And the one thing that happened in this area, there was actually a repo rate change in the Namibian economy, and as a result, the prime rate, which means the home loan rate, increased, and that is what actually happened. So there was a bit of adjustment in our monthly mortgage, but it wasn't too much, simply because the interest rate were already low. But we should be also looking forward to another interest rate hike that's currently expecting. As you all know, our currency is actually pegged. Pegged means it's supposed to be on par with the South African currency. So the benchmarking of the interest rate needs to be similar in both countries. And in South Africa, they recently had another interest rate hike, but it's been a week and bond is quiet, so we're just hoping they come and pronounce themselves, either to say that the interest rate will remain unchanged or to just say that they will increase it with 25 basis points. It's highly unlikely that it will increase by 50 basis points, which is some of the voting that some of the committee members in South Africa actually voted for 50 basis point increase, but the 25 was actually the majority rule, so at least it didn't go up that much. So that is just something that I wanted to touch on in the area of debt. Then savings, this construction really just depleted all the savings we had. We didn't have an emergency savings, so we started with an aggressive savings plan to try and rebuild the savings. You normally want to have emergency saving just in case something major happens. You have some cushion to fall on. So we are currently tracking according to plan with regards to saving. We put up a savings table where we commit to save a fixed amount per month, and this is actually just going in a money market account. Currently, we are actually using just a 32-day account to put in money. Even if it's an emergency, 32 days is still enough notice for in an event something comes up, and you can also still cancel on a short notice and incur slightly bigger penalty at the time of cancellation. So at the moment we are keeping it there. The reason why I'm not putting it in a call account, with all this construction, there's just so much temptation to want to get things done, and if I put it in a call account, I know I might just go get it and end up in the construction. So that is just a self-refraining technique. That is what we are currently doing. Right. Then on farming, we actually started plowing our mahangu fields for the first time. If you are an Oshiwambo personnel and you get married to another Oshiwambo personnel, you are expected to have a field, and we got a portion of a field and we plowed it for the first time last year. The cost involved in that is actually not that exorbitant. We plowed the field and we got some guys to do the weeding. My husband went up north, I think in February, to go and supervise the weeding process. So that is actually something that was good to do, and I'm really super excited because I'll be going on leave sometimes in mid-April. So I'm super excited to see the progress of the field and to actually just see what we're able to achieve. And hopefully we will have enough mahangu flour for our own without me asking my mother to send me a bucket of 25 cooking flour. So yeah, that's just one thing. Then with regards to giving, I also schedule giving. I used to have someone I give on a regular basis last year. That was a charitable act. And then I also have my scheduled black tax giving to my parents, to a few people that I give in the family. So that went really quite on plan. I normally also have a small portion of ad hoc giving, depending on how many requests are coming in. Then I can decide who to give from there. But this month things are really tight. My giving is already depleted. So I am going to try and see if I can accommodate some other requests in an event they come through and they are really, really an emergency. So what I want to highlight here is that don't just give as people come. Plan and commit to an amount that you are willing to give. I was doing a Q&A on Instagram the other day, and someone said they give 10% tithe before they spend anything, and I think that is a really good way to discipline yourself. So if you can commit an amount to giving, then you know it's not available for spending. So similarly, I just commit this much is available for giving, this much is scheduled black tax, this much is ad hoc giving. If you come in that amount depleted, unless your life depends on me giving you that money, then I won't be able to give you the money again. And then with regards to investing, so I was doing, I did the net worth assessment seminar, and there you are just trying to assess how much you are worth. I have an Excel spreadsheet that I keep track of the net worth, and obviously with the construction, we're getting more, because we are constructing cash, we're getting more equity in home ownership. So just to divert a little bit, and talk about that. So when you buy a house, you have a property that's worth, for example, just hypothetical, you have a property that's worth 200 and the bank gives you a loan for 200. So on day one, you don't own any ownership, you don't have any ownership percentage in that house. That means the bank 100% owns the property, and that's why the bank actually keeps a mortgage over the title deed of the house. So if you were to go to the deeds office and you want to get your title deed, the paper that indicates that you own the property, you see a stamp that says there is a registered bond over whatever bank you have, that they actually own the property. So as you pay over the debt over time, then the debt start decreasing, so say from 200 to 150, and your house value hopefully starts appreciating. So as you make the payment, you are getting slightly more and more and more equity in the house. So basically, because we are building cash, every improvement that we make on the house means we own more and more of the house. So essentially what that is doing, it's pushing up our net equity. So I keep track of that. And one of the things I realized that yes, we are doing well with home ownership, we are doing well with savings. I need to introduce some elements of risk investment in our portfolio. So this month I added 2 products. One was a retirement retirement investment product. I really like this retirement investment product because it has a wealth bonus. It has a way they calculate how much you contribute on a monthly basis. They calculate how much return you make, and they calculate how many years have you had savings post pre-retirement. So for example, I'm turning 30 this year at the end of the year, and by the time I retire, which is normal retirement age in Namibia is 60, so I would have contributed to this fund for 30 years. So they will say, since I've been part of this fund for 30 years, my retirement bonus is that much. So that is really something I like about this new retirement product that I added to our portfolio. Number 2, I also took out an additional 15-year investment term. This product has a bit of a risk exposure to it, meaning it has more products that are more riskier. For example, equity, a little bit of bonds, a little bit of property, and yeah, so that's basically it's a fund that I've basically invested in, and it's just to introduce a bit of a risk to our portfolio, because with greater risk comes a greater reward. So basically that is the investment component for it. And my broker officially has moved firm, so I got reallocated to a new broker at my previous investment company. These new investment products are actually with a different investment company because I just want to also diversify my risk. It's also not good to have all your eggs concentrated in one basket, so I actually just moved so that I can have a bit of that diversification. And I got allocated a new broker. I had my first call with the broker, but he's actually not in the office. I'm going to catch up with him next week because there were some changes I wanted to make on some of our products that we are currently having with the old firm that hasn't been put through. So that's basically all that has happened around the investment option in this last 3 months. And then just to wrap up, I have somehow communicated that my tax affairs are not up to date. I have penalties that are currently levied on my account by error. I had made an appointment to go see the person that is dealing with my revision of the taxes. Last year they revised some of my return, but they did it incorrectly. I went there, the person wasn't in the office, and I'm trying to email. I haven't been able to get through to anybody, so I'm still trying to fight it. I want to get them to revise my return. I want them to reverse the penalties that are actually due. Then I want them to, because that's going to put me in a refundable position. Then I want to arrange an income tax audit so that I can actually get my refund. But I also don't know if you have read the news. There's currently some fraud things happening at NAMRA, and they've actually frozen refunds to be paid out to individual until June. So I can't expect any refund from the receiver at least until June. But I'm not too worried about the refund. What I'm worried about is those penalties being cleared off my account so that my account can get up to date. The reason why I haven't been able to sort this out over the last couple of years is because I started working in Windhoek before I transferred to Walvis Bay, and my file was in Windhoek. So with regards to income tax, you can only get assistance at the office where you are registered at. And I didn't transfer my file. So because of the last year being Corona, there was not really much time to travel. I didn't get a chance to do it. But now that I'm here, I'm trying to be actively involved with it so that I can actually wrap it up in order for me to be able to close out my 2021 tax so that I can file my 2022 on a clean page. And lastly, I am re-looking at some of the insurance. My phone was insured, and I know when iPhone 12 came out, the value was very high, so the insurance premium was slightly pricey. So I wanted to actually call my new broker and negotiate, or actually I want to call my new broker and negotiate a revised premium, because iPhone 12 has dropped in value. So that means, and my phone is actually 1 year old, so the value that I can expect from it is actually a lot less. So I need that to be revised in order for me to be able to save on insurance premium. So basically that's all that has happened in the first quarter. It's been quite a packed quarter. So just let us know either in the comment section or in the Instagram DM me, how has been your first quarter be? What are some of the changes that you're introducing in quarter 2? Are you doing your budgets or your goals on a monthly basis or on a quarterly basis? And if you are doing it on a monthly basis, how about considering to actually doing it on a quarterly basis? The one thing that I also just want to mention here, when you're doing your budget on a quarterly basis, it actually helps you, because you tend to get that long-term view. You tend to anticipate once-off costs. So for example, I don't know if you saw that, if you watched, I think 3 videos back, where I mentioned that we had a disc that, or budget busters, the video is called budget busters. We had a disc that expired, and it's something that recurs on a yearly basis. So I don't know how I missed it, but those yearly recurring costs are some of the things that you can actually anticipate if you are doing your budget at least 3 months in advance, because it gives you time to think, especially if you also have your data from prior year and you're comparing your first quarter budget with last year quarter budget. You can easily pick up trends and see if you've maybe missed a major expenses in your budget, or if you maybe need to remove once-off cost that was in your budget last year. So really, that's all I had from today's discussion. Thank you so much for tuning in. Thank you so much for subscribing, and let's continue engaging so that you can help me grow this amazing community. Until next time, it is goodbye.